The ones that think the price is going to go up a lot, and look at this chart, it's not like a year down the road. It's August of 26.
Oh.
So they're thinking prices are going to go up a lot. You know, this is their expectation. This is their perception. Well, perception is what causes people to trade.
Right.
So let's look at silver. So silver, oddly, the chart looks about the same, right? The number of traders who think the price of silver is going to jump a lot in the August contract is like 90% of these commitments.
It's great to have Dr. Elliott back with us once again, and we know .com/gold in the description box below. So much going on every single day that we report. I mean, it's hard to keep up with it all. President Trump made another big move with NATO this past week, and man, just the news just keeps churning on every single day. Welcome back.
Oh, it's so great to be with you again. Lots going on. What creates a lot of volatility.
Yeah, it sure does.
But we can understand that with biblical wisdom that God gives us and navigate through it and realize that all of these crises that the world is saying is a crisis is actually an opportunity.
Amen. Amen. Yeah, Iran was a big one on the ticket. It looks like they started getting hit once again this week, and some stuff that you want to bring up on that.
Yeah, so we've talked a lot in the past about how when this conflict is over, gold and silver should go up, and significantly, right? But here's the thing. The conflict isn't over. We think it is, and then it's not. We think it is, and then it's not, right? So this is a difficult thing. I wouldn't want anybody other than Trump navigating through this for us, because he actually has a backbone, and he actually is trying to get rid of a rogue terrorist regime controlling the oil of the world, right?
Yeah.
But it doesn't mean that every day is going to be a fun day navigating through this, right? It's just like not every day is a fun day when you get persecuted for following Jesus, right? But yet the end result is amazing if you continue on and keep the faith, right? So this Iran thing, it's it looked like it was over, and then all of a sudden it wasn't, because Iran said, we're going to bomb some of these civilian, cargo ships or whatever was going through there. And so Trump said, no, you're not.
That's right.
And so he took control of the situation, right? But what did that do, right? So that caused gold and silver to come down immediately, caused the stock market to get hit incredibly hard. I think the Dow was down $600 that day. Well, what happens the next day? The Dow's up like 400.
Yeah.
Silver was up. It was 58.50, I think, on Thursday morning.
Yep, Thursday. Yeah.
And then by the end of the day, it was $60.60. I mean, it's growing, right? But the point is, there's a lot of volatility now. During this volatility and the conflict in Iran happening, and this is where there's a lot of mixed messages in the news and a lot of data points that are hard to navigate through, right? So in a normal world, you've got conflict, gold and silver should go up because it thrives on geopolitical issues, right? But this one, because it basically has oil involved, and the price of oil is used in everything. The interest rate story came in. I think we've covered this maybe 4 or 5 times, right? So this is why there's conflict. But during this conflict, what did China decide to do? So just like any business, like if you're a business owner and your main supplier has cost of goods that go through the ceiling, you try to find another source, right? So This is what China's doing. Said, you know what? The strait was shut down since February, the end of February. They couldn't get oil. And so they did 2 things. A, they started looking for other vendors, other maybe OPEC countries, other countries in the world to get oil from. And they made a strategic maneuver domestically that says, all this oil stuff, let's actually do, this is my paraphrase, what America's doing and actually start to embrace some more green technology, right? So their demand for oil is coming down. Well, this is a problem for Iran because China was their number one trading partner. They bought more oil from Iran than any country on the planet. China is the largest purchaser of oil on the planet, irregardless of Iran, right? So now the demand for oil from Iran is going down. So what did the OPEC plus nations decide to do? They said, okay, let's try to find other sources because China's changing a little bit or a lot of it, and let's increase our production. So they increased their production in OPEC countries by 188,000 barrels a day. So what does that do? Higher supply. There's more supply, less demand. What's going to happen to the price of oil? It should come down, right? When you have higher supply, lower demand, the prices will come down, which is the opposite of when you have low supply and high demand, the prices go up. So here's the problem, right? And it's not necessarily a problem, it's an opportunity, but that is, so what's it going to be? Is the price of oil really going to continue to come down, which puts a kink in Kevin Warsh's plan of we're going to have rates higher for longer to fight this inflation, when at the same time, the price of oil should technically come down. Now, it went up because the conflict erupted again. But when you have lower demand from China, higher supply, the prices are ultimately going to come down, which means what? Means you might not have to raise rates. Right. So prior to this conflict erupting this week, the markets like, poly markets and whatever, the predictive markets, they said, okay, there's a 68% chance that we're going to get rates increased because they needed decreased because of the price of oil. But now it's not. It's 48% chance that they're going to have to raise rates because they think that the price of oil is going to come down. So use this as noise right now, right? It's kind of a temporary blip. But what does that bring to the markets? Tons of volatility, up and down, up and down, and up and down, and up and down. Right. And it's going sideways, but metals are trending up. Because you look at where silver was a month ago, it was 55. Now it's 60 and a half. That's up more than 12% during that time frame. That's not too shabby for a month's worth of growth, right? I mean, you analyze that, that's really big. So, but what do I think is going to happen moving forward? Moving forward, this is not a domestic United States issue. This is a global issue, right? So take the United States, Iran conflict and Israel out of the question. Just let's pretend that it's not there, right? So moving forward, we've got global imbalances. Countries are debasing their currency. They're printing money like there's no tomorrow. Yeah. This is inflationary. That means ultimately what I think is going to happen is we will probably get a rate reduction by the end of the year, maybe first quarter of next, to try to stimulate the domestic economy. And I want to go in why we need to stimulate the domestic economy. But ultimately, they are going to have higher rates, not because of the United States, but because of competitive devaluations with currencies. The global economy stinks. It's stagnation and inflationary stagflation like nothing we've ever seen, right? So ultimately, I think you are going to have higher rates to compete with other countries that are also going to have higher rates because they're printing money like crazy. They're dumping US dollars. Japan just decided we're going to dump a lot of our US treasuries back on the open market. Yeah. We don't trust the dollar, right? So this is a global thing. It's not China retaliating against America. It's kind of the whole world saying, we've got a problem with debt. We can't get out of it. We're going to have to print money. That means globally interest rates are going to have to go up. And America is going to have to kind of compete with that in a sense, because if you don't, nobody's going to invest in U.S. treasuries, right? So in that kind of an environment, you have competitive devaluations across the board. So I think that's ultimately what's coming. But in the meantime, we've got massive volatility. Now, why do I think that we are going to get an interest rate cut maybe by the end of the year, by the first quarter of next, because the economic data, it stinks. It's not good, right? And take this statement with a grain of salt, because it's not good. And Trump is a great businessman president, right? He's doing everything to make America great again, with tariffs, making other countries pay our taxes, not us, right? I mean, he's trying to stimulate the economy.
Yeah.
But it's not doing so hot. But imagine what it would have been and how awful it would have been under a Biden administration or Harris administration, right? It would have been like intensely worse. But here's where the numbers are right now. So I want to put this into perspective. Job growth numbers came out for June last week.
Okay.
So employers added 57,000 jobs. And you're going to get a positive spin on that from mainstream media, more than likely, which is, look, we created 57,000 jobs. So it's great. However, the expectation was they were going to create 110,000. In May, they actually created 172,000. So the job creation is lower than expected by about half, but it's actually worse than that, because what's happening in America right now? The World Cup.
Yeah, World Cup, yeah.
Right. So with the World Cup, it's an estimated 40,000 temporary jobs were created during the World Cup. Okay. So those aren't real. Those aren't long-term jobs. They're going to go away when the World Cup is over. So you subtract out the 40,000 temporary jobs from the 57,000 job growth. That means we technically only created 17,000 jobs. That's not good. But I would bet that it would have been negative under a prior administration, not even positive of 17. It would have been negative. So we kind of have to, even though it looks bad, we have to count our blessings where we have them, right? But then the unemployment rate, I mean, the financial news is talking about this. And to me, it's a nothing burger, right? Because the rate ticked down from 4.3% unemployment in May to 4.2%. It's negligible. That's nothing to really even talk about.
Right.
The other thing that actually is not getting much attention is wages. So you're getting braggadocious comments from the Department of Labor and everything else that hourly earnings grew by 3.5% annually in June. Okay, it's fine. It grew, right? That's good. Is it though? Inflation grew by 4%, right? So that's the gap of affordability is widening.
Oh yeah.
And so this is why Kevin Warsh is in a pickle, because he needs to stimulate the domestic economy with those kind of numbers, and with I think what's going to be soon a decreasing price of oil, because I think that this current conflict, right, is going to end and oil will come down. So when you've got oil prices, inflationary pressures coming down, the job market is not good. You're going to have to lower rates for a bit, right, to try to stimulate things.
Yeah.
So, and there's no need to have higher rates if inflation is subsiding. But this I don't think is going to be long-lived. And again, has very little to do, I believe, with the domestic economy. It has everything to do with the global economy, which is not good, right?
Mm-hmm.
So what happens in that environment, right? Well, this is where gold and silver should thrive. So one way that we can look at this is look at the traders, right? The paper traders. I'm not talking about physical metals here. We're talking about the futures market. So traders in the futures market, when you look at gold, look at this chart.
Okay.
So there's 4 data points on there. Traders who think the price is going to have a big jump. Prices, traders who think price is going to go up, but not so much. They think it's going to come down just a little, and they think it's going to come down a lot. Well, the ones that think it's going to go up a little, down a little, or down a lot are very few. The ones that think the price is going to go up a lot, and look at this chart, it's not like a year down the road. It's August of 26.
Oh.
So they're thinking prices are going to go up a lot. This is their expectation. This is their perception. Well, perception is what causes people to trade.
Right.
So let's look at silver. So silver, oddly, the chart looks about the same, right? The number of traders who think the price of silver is going to jump a lot in the August contract is like 90% of these commitments, 80 to 90%, I would say. So then you've got the ones that think it's going to go up a little, negligible, down a little, negligible, down a lot, negligible. But the ones that think it's going to go up a lot, this is what is forcing the paper markets and the banks to now do what? There's the number of shorts is going up a lot. Why? Because they expect the price to go up. If you're caught with a short position when the price goes up, you lose money hand over fist. So now all of this is sort of making sense. It's like, why would the banks be shorting? Well, because they think that the price is going to go up. They need to unwind their remaining shorts because in January, October through January, when this was a big deal, right? The people were unwinding their shorts. The price was going up. It was skyrocketing. Silver went up 147% for the year, but most of that move was in December and January in a 2-month span. If they didn't unwind their shorts and got rid of these negative positions when the price was going up, they would have lost out big, right? So this is happening again, which tells me the expectation is that the price is going to go up, not down. Now, could it come down? Sure. On any given day, we don't know what's going to happen in the Iran conflict. We don't know what kind of news is going to come out, and you're going to see volatility for a bit until we get traction in this wet clay, so to speak.
Yeah.
But this is one of those weird times, and I've felt this way for probably half a year, where it's way easier to make a forward projection than it is for one tomorrow. Right? It's like the world is changing. I can be more confident where I think silver and gold or the stock market or anything is going to be 6 months or a year from now than what it's going to do tomorrow.
Right.
And it's just one of those weird times in history. So what causes me to think like that? It's simply supply and demand. That's it. It's the fundamentals. It's the most basic of things, right? It's like if there's low supply and high demand, prices will go up. Like we're seeing with oil, if supply is going up and demand is coming down, the prices will come down.
That's right.
So that's kind of how I look at everything. And I think that's just using wisdom in the analysis and stripping out the emotion from the decision. Right? And so, I mean, economically, financially, technically, fundamentally, that's where I see the markets right now.
Yeah, it's interesting as all this has been playing out. A lot of folks question probably how they would work with you with their IRAs. We haven't brought that up in a while. Just a rundown real quick of what they can do when they reach out to you and your team.
Yeah, so it's really easy. You just call us, right? Or we go to your website, the landing page, which is andweknow.com/gold, and you just say, hey, I liked what LT and Kirk were saying. I really need help. So in IRAs, if it has the word IRA in it, you can put physical metals in it. So that would be a traditional IRA, a Roth, a simple, a SEP, an inherited. All of those are types of IRAs. You can actually own physical metals. It's not a paper proxy. It's not anything but physical metals stored in your name in an IRA. Now, if you have a 401k or a 403b, once you retire, you can roll all of that into a traditional IRA. If you're still working at a company that has a 401k and you're 59 and a half or older, you can take that balance to zero if you want and roll it into an IRA and at least capture everything you've worked so hard in your life for and allocate them into tangible assets. Now, you can't get rid of the plan because you're still working there, but you could take the balance down to zero and keep the plan open. That's how we can work with 401ks or IRAs. Now, the types of metals that you go into, and I think this is important, especially with some of the news that came out this week, right, is not all gold and silver is good, right? The only ones that you should actually allocate into is bullion. Simple. No collectibles, no semi-numismatics, no rare coins, no commemoratives, just simple, straight bullion. The reason is it's low cost. It's what the Sonys of the world buy when they need metal for manufacturing, or Samsung's or whoever, they're not going out to the exchanges and saying, we want a bunch of silver eagles, Canadian maple leafs, or some of those Trump commemorative coins, and we're going to melt them down to make our components. They wouldn't do that. That's silly, because it costs too much for those things. They're commemoratives. They have a premium on them for collectability. So what they buy is bullion. So when you buy bullion and you want to liquidate, it's as simple as pressing a button, right? And so you say, hey, Kirk, we want to sell. We don't charge anything when you liquidate, and it's sold because it's a global commodity, right? I don't have to make a market for it. I don't have to find and search and make calls to client B, C, D, and E and say, hey, have we got a deal for you? We just got this inventory in, and we think it's a good deal right now. You should probably buy it. We don't have to do that, which might mean at the top of a market, those things are illiquid. Right. Because when everybody is selling to lock in their profits and there's very few buyers, what are companies that carry an inventory going to do? They're not going to buy it back. Right. That's a problem. So this week we saw a large company in the industry file for Chapter 11 bankruptcy. That was Rosalind Capital. If you watch Fox News, you'll see them like a bajillion times a day. They basically own the gold space on that network, right? Well, they filed for Chapter 11. It's like, how could they? How could they file for Chapter 11, gold and silver in a bull market, and have been for years? That doesn't make any sense. Well, thestreet.com posted a story about it. And when people would send in their money, they didn't buy the metals right away because they had problems with their vendors getting them enough material, because they're not selling strictly bullion. So they had to wait for the inventory to come in. Well, they took the client's money, but then by the time the product came in, the prices might have been 50 or 60% higher. It was a bad business model. They couldn't exist. So in June, they laid everybody off. There's no more employees. They filed for Chapter 11. And you know what's sad about this to me is all of those clients who may have bought some of those commemoratives, they have no outlet for them now. Right. See, and we're not even to the top of a market. Imagine what's going to happen when company after company after company basically says, we don't have enough buyers to support the liquidations. Rosalind just got caught between a rock and a hard place because of their pricing model and how they bought and sold metals for clients. And it turned out nasty for them. Turned out nasty. They had to file for Chapter 11 in the middle of a bull market. Yeah. So this is why, to me, it is, and this is not a slap in the face to Rosalind Capital. This is a slap in the face to that type of business model where you don't buy something right away when clients' funds come in because you don't know what the markets are going to do. Right. I mean, and it's sad, but here's where this is so important that you understand. Not all gold is good gold. Not all silver is good silver. Just because it has the name in it, don't overpay for it. Make sure that it's being purchased when you buy it, and make sure that you can liquidate it when you want to sell it. That's right. It's really a simple formula, and that's how God instructed me to set up our company from the jump. That's how we've always done business, is that way. And so there's safety in that. And part of the reason why people invest in gold and silver is not just because it's growing, it's because they want safety. Right. Well, if you want safety, it needs to be safe on all aspects of it, right? So anyways, a sad story that's just kind of a warning to everybody that just because something is on a show where you might trust the host doesn't mean that the company has good business operations, right? And there's been other companies that have failed recently, right? But we don't have to worry about that because it's something that we just have focused since day one on doing bullion only because it's easy in, easy out, low margins. Prices don't have to double or triple for you to break even. Right. It's an 8% commission when you purchase, 0% when you liquidate.
Amen. You guys have done a fabulous job, and yeah, you take care of us right away whenever we grab silver from you, and it's just phenomenal work from your team, and we appreciate you. And we know .com/gold. Folks, in description box below, click on that link. It has the phone number there for you also. Thank you, Dr. Kirk Elliott. We're looking forward to further updates coming up.
It's my pleasure. We'll talk soon.